So hi everyone, it's Wisdom Generate back here, and in this lesson we want to be looking at Fibonacci levels. Okay, so we shall be looking at the Fibonacci retracement levels, the Fibonacci extension levels. Okay, so Fibonacci retracement and then Fibonacci retracement. So we are going to start off with Fibonacci retracement levels. Okay, so traders use Fibonacci retracement levels as potential support and resistance areas. So since so many traders watch these same levels, uh, so they place buy and sell orders on them to enter trades or to place stop losses. Okay. So the key Fibonacci levels are the 23.6%, 38.2%, the 50.0%, then you have the 61.8%, and then the 76.4%. Okay, those are the key Fibonacci retracement levels. So the ones that seem to hold more weight are the 38.2, 50.0, and then the 61.8 levels. So these are normally included in the default settings of the Fibonacci trading software. Okay. So when you look at the chart here, I want to introduce you to what we call the Fibonacci retracement. I want you to note the word retracement, Fibonacci, and then retracement. So this is how the market moves. Like the market moves in waves. So it moves in a wave up, retracement, wave up, retracement, wave up, retracement, wave up, retracement, wave up, then retracement. So what happens is that the Fibonacci retracement tool is helping us to pick these retracement levels. Okay, so every time the market retraces, it retraces to a potential Fibonacci retracement level, and then that is the level we are looking for. So if it is in a downtrend, market goes goes low, forms a retracement, goes low, forms a retracement, goes low, forms a retracement. So the Fibonacci retracement tool helps us to pick these retracements. Okay, so for example, when you look at the chart, so when we are using the Fibonacci tool, of course, we are going to join the different points. For example, point A, price goes high, is point B, and then forms what we call the point C. So point A is where the market starts, point B is a changing point, point C is a changing point, and then we form point D. Okay, market retraces, it forms a new point. This is point E, and then it forms point F, and then it will have to retrace, then continue. Point G, then point H. This is in an uptrend. So when you look at the point C, it's going to be a Fibonacci level or a Fibonacci retracement level. Then point E is also a Fibonacci retracement level, and then point G is a Fibonacci retracement level. Okay, so what happens is that normally these points, the Fibonacci retracement levels are 61.8, like we said, the 50.0, the 38.2, and then the 26.3. So that is in an uptrend. So in a downtrend, it's still the same thing. Okay, it will move in points. For example, when you look at the market here, this is going to be point A. So the market goes down. Okay, the market retraces, and then the market goes down to this level. Okay, so or in some cases you can ignore these levels depending on the levels on your chart. Okay, depending on the levels on your chart. Okay, so for example, this level was ignored because of the levels on the chart. So consider this point as point A, and then point B, and then this point C, and then down you shall form point D. So we expect the market to move down, go up, go down, then go up. So this point A is going to be this point, then point B is this point. So whenever you look for retracement levels, of course, we are going to connect point A and then connect it to point B using the Fibonacci retracement level in order to get point C. So point C is what we call the Fibonacci retracement level. So whenever the market hits the Fibonacci retracement level, it has to follow the major trend. So that's where we get our sell order. Okay. So, and then we say that level is going to be a 61.8, 50.0, 38.2, or 23.6. Okay. So Fibonacci extension levels, opposite of Fibonacci retracement. So traders use the Fibonacci extension levels as potential take profit points, or in some other method, okay? And they are normally the 0.382, the 0.618, the 1.0, and then the 1.38, and then the 1.618. So those that we have to keep an eye on are the 0.618, the 100, and then the 1.118, okay? This is 1.00 or the 100, okay? So in Fibonacci extensions, just like the word extension, when the market is moving, it has to form an extension and a retracement. Extension, retracement, extension, retracement, and then extension. So what happens in the market, this is an uptrend. So when you're using a Fibonacci retracement tool, we look for these retracements, okay? But when we are using the Fibonacci extension tool, we are looking for these extension points, okay? That is what happens with the Fibonacci extension. So when we look at the chart right here, this is the market is moving downwards from the retracement. So we are looking for this extension. So the extension might happen at the 38.2 or the 50 or the 61.8 or the 100, or that is the 0.38, 0.618, and then the 1.0. Okay. So in the next session, we are going to be looking at moving averages. But before we go to that, before I close the video, I want to jump onto a live chart and show you how exactly to use the Fibonacci levels. Okay. So just a recap. Okay, let's go to the live chart. So for example, when you look at the chart right on your screen, you can see that this is a clear uptrend. And why is it a clear uptrend? Of course, the market forms an extension, then lower low, higher high, higher low, higher high, higher low, then a higher high, and then a big retracement. Okay, so that is a clear uptrend. So we have said that for a Fibonacci retracement tool, we use it to pick the retracements of the market. Okay, so this is a retracement of the market. The market swings high, retraces, swings high, retraces, swings high, and then retraces, and then it swings high. So we use the Fibonacci retracement tool to pick these retracements. Okay, so we very well know that every time the market retraces, it has to continue high. So if the retracement is at a Fibonacci level, we are highly probable that the market will continue in the trend. So if it's not a Fibonacci level, we do not take the trend because we expect the market to reverse because it has broken the Fibonacci level. Okay. And then if we are using the Fibonacci extension tool, we use it to pick the extensions of the market, and that is these extensions. Okay. This is the extension of the market extension, then the market extension. Okay. So market extension, market retracement, market extension, market retracement, market extension, market retracement, extension, market retracement, market extension. So Fibonacci retracement, we pick retracement. So Fibonacci extension, we use it to pick extensions. Okay. So when we look at the chart, let us start off with a Fibonacci level. Then we said when you have a Fibonacci level, of course, we are going to pick retracements. So the market moves in that format. We have point A, then it forms point B, then it forms point C, it forms point D, then E, this point E, F, just leveling up and points of the market. Okay, So every time the market goes to B, swings to C, to D, then to E, to F, to G, to G, like that, like that. Okay. So we want to pick these retracements as Fibonacci retracements. So what do? We get our Fibonacci tool, we connect it to point A, then point B to pick point C. Okay. Connect from point C, point D to pick point E. Connect from point E to point F to pick point G. So we connect from point G to point H, pick the new point, which is going to be there. Okay. So when you look at the market right here, it is a clear uptrend. Then we want to use it to study the Fibonacci retracement. So for example, if this is our point A, and then this is the point B, then this is point C, then this is point D, this is point E, then this is point E, okay, then you shall have F. So we want to find out if point C was a Fibonacci level, point E was a Fibonacci level, then if this point is also what? A Fibonacci level. Okay. So what we shall do is that we shall come into the software and then look for the Fibonacci tool. So if you don't know how to use MetaTrader 5 or MetaTrader 4, of course, be patient. This video will also come on this channel. Subscribe, then you shall be looking at it. So here, when you pick the Fibonacci extension, and then you pick from the swing low at point A, and then you click on your mouse, a long press, and then pull to point B. Okay, it shows out waves. I don't know, I cannot be able to zoom out the video for you to see well, but try to zoom in on the video and see. Okay, so when we look at those points, it forms points as 0.0, 3.6, 38.2, 50.0, then the 61.8, and then the 100. And then we say these middle Fibonacci retracement levels are the ones that we shall be watching more. So we shall be looking at 38.250 and then a 61.8. So when you look at this level, point C, this is wave A, and to B to C, this point C here is a Fibonacci level because it is at a 61.8, and then 61.8 is the strongest Fibonacci retracement level, followed by 50, and then followed by 38. Okay, so 23.6 is a weak one. Okay, so right again, we want to find out if we want to find out that if this level was a retracement level that is at a Fibonacci level, of course we shall get a market swing from here up to here. So we have to connect this point to that point so that we find out if this retracement was a Fibonacci level. Okay, so we shall pick our Fibonacci tool from the system and then put it on the screen. So pick the Fibonacci level, you put at a swing low the previous point, swing to the highest point before the retracement, and then we can be able to see that if this was a Fibonacci level or it was not. Okay, so when look here at this point, the market tried to break through that Fibonacci level, but it failed. That was a 61.8, and then we say that 61.8 is a very strong level. So 61.8 acted as a level of resistance because it was hit once, then it hit twice, and then the price reversed upwards. So if we want to find out if this level here is a Fibonacci level, for example, now when you look at the chart right here on your screen, so we want to find out if the price left this level, okay, then it dropped to make a retracement. It went very high here, and then now it has made a retracement. So we expect the price to go higher. But at this level, we do not know whether the price will either go high or the price will come and break to form a new downtrend, or the price may continue to form and to continue with a major trend. So what we do is that we put on our Fibonacci extension level. See, if this is a Fibonacci extension level, of course, we expect the market to rebound and then go upward. Okay. So we are going to pick up our Fibonacci level, Fibonacci retracement tool, and then put at the swing low, was right here, and then we swing high to the previous swing high, okay, and then find out if that was a Fibonacci level. So from we can be able to spot that this was a 61.8. So the market has not retraced to the 61.8, which is the strongest level known for Fibonacci levels, as I've told you. So the market is finding support at the 50.0 Fibonacci level. Okay, it's a 50.8 right here. Okay, so right here we are seeing that the market is finding support at the 50.8 Fibonacci retracement level. So this is a Fibonacci retracement level. So we expect the market to hit this 50 Fibonacci retracement level and then find its way back upward. So this is a probable trade. Of course, do you take it right now? This is the euro dollar on H4 time frame. No. Why? There is no confluence. So Fibonacci retracement levels are also used in confluence with other trading parameters like the indicators, support and resistance, etc. Okay, so that is how we use the Fibonacci retracement. So we want to find out if this point is a Fibonacci level. Of course, this is a point A, as a previous swing low to the previous swing high. Then we find out if the swing low is a Fibonacci level. So we shall go back into history to see how to use the Fibonacci on a downtrend that was an uptrend. Okay. So for example, when you look here on this clear uptrend, I want you to know that Fibonacci retracement works in clear uptrend or a downtrend. So when you look here, the price went high. Okay. Exactly there. So when you look at the chart, okay, look at the chart here, we have a clear uptrend, then it is followed down by downtrend. So we are expecting the market to pass because it is forming what we call, this is a higher high, and then lower low, so we expect a new higher high. So, but do we know whether the price will go high or no? Of course not. So what we do, we are going to pick out a Fibonacci level, Fibonacci retracement, and find out if this is a Fibonacci retracement level. So if this is a Fibonacci retracement level, of course we shall take the trade. If it is not a Fibonacci retracement level, we do not take the trade. So you come, pick your Fibonacci retracement. This is the previous swing low, swing it to the connect to the previous swing high, and then we can say that this was a 50.8 Fibonacci level right here. So here we have the 50.8 Fibonacci retracement level. So we expect that the price will keep going high. So what we do, of course, we shall take the trade from around here and put our take profit on the previous swing high. So go high. Okay. Oh, here the price went up. Price goes up, of course, and then the trade was so probable. Okay, like that. So I want to get a number in a downtrend. Let's try to go back into history and see. So for example, there, that's not a clear one. exactly there. So when you look at the chart right here, we want to see if this was our previous, if this was our Fibonacci level. Of course, we know that in a downtrend market moves in this format. Okay. Then you're seeing that here the market went down, went high, went down, now high. So we are expecting a new down movement. So do we take the trade from here to catch the wave down? Of course no. We shall pick out of Fibonacci level and then Fibonacci retracement tool to see if this was a Fibonacci level. So pick your Fibonacci. So we shall pick our Fibonacci. Of course, in this downtrend, of course we have market movement from here. Market goes there, goes here, it's there. So we expect a new wave down, jump up to around there. Okay. So if we expect a wave down, of course, what are we going to do? We shall find out if this was a retracement level. If this is a retracement level, of course, we expect the price to retrace from there to cover up the previous, to create a new swing low. So what we do, we shall call this. So to find out if this is a previous, if this level is going to be formed, of course, we shall look for point A, that's a previous swing low, the point A, and then this is point B, and then we shall be looking to form point C. Okay, from A to B to form C. Okay. Actually, big retracement from the swing low to the previous swing high. Okay. Oh, sorry. We are supposed to connect this as point A, okay, to this swing low, as point B, then to see if point C is Fibonacci retracement level. So we shall pick our Fibonacci tool from right there to this swing low. Okay, so we can see that this was a 50.8 right here, the 50.0 Fibonacci retracement level. You can see this is 50.0 Fibonacci level. So we expect the price to create a new swing low. Follow this of this fashion. That right, low swing like that. It has formed our first swing low and a swing high right here. So we expect a new swing low which is lower than the previous. Okay. So we shall move down. Price goes down, goes down. Oh, reached. We're gonna just work for that time. So do we take the trades just as simple as that? Of course not. You need more knowledge. Okay. So in Fibonacci extensions, what happens is that we pick the extensions of the market. This time around, we do not look for extensions, but we look for where the market is going. Okay. So, for example, here, use this example. So, for example, here we can see the market is creating higher high, higher low, high, higher low, then higher high, and then the market. So, when we are using the Fibonacci extension tool, we want to pick these extensions. Okay. So in Fibonacci retracement, we pick these retracements right here, right here, right here, those retracements. But in Fibonacci extension, what we do is that we look for the extensions, this swing high, this movement. So we use it as a potential take profit or sometimes as a stop loss, but in most cases as take profit. Okay. So from here, we are going to look for example, this wave B. Okay. So for example, if you're here and then price moves to that level, then the price retraces, and you find out that that is a Fibonacci level. Is it a Fibonacci level? Of course, let's find out if it is a Fibonacci. So we get from point A into point B, and this is 38.2, and one can see that one, sorry, 38.2 Fibonacci retracement level. So if it is a Fibonacci retracement level, we expect a swing high. So for us to determine when a swing high will, where it will go, shall now need to pick up what we call the Fibonacci extension. So you go to pick out your Fibonacci extension. Okay. So we pick Fibonacci extension, connect from point A next to point B. So it also has its point C already formed. Okay. So we expect the market to form a swing high from this point. So expect the market to form a swing high from this point, and then it will go up. So the market will either come and hit the 61.8% Fibonacci extension level, and that's a very probable level, and of course the market went up, or it will go to the 38, or it will go to this is the 100, and then this one is 161.8. Okay. So we are saying if we want to get to know how. So we are saying that the market is moving in this format. Okay. So if we want to find out where the market will end in this swing high, of course we shall pick from point A is a previous swing low, the swing high, and then find out where wave B will end. It was a Fibonacci level of 38.2. Then the market went up to Fibonacci extension 61.8. In fact, it seeked this level, which is very high. Okay. So we look for an example in a downtrend. Downtrend. So for example, right here we have a clear downtrend. Okay. So that we have a clear downtrend. Then from there the market retraced to this level. There, here, there, here, then that level. So we want to find out if this was a Fibonacci level or this was a Fibonacci level. So what we shall do is we shall put our Fibonacci extension tool from here, and then connect to point to see if this was a Fibonacci. Okay, so we shall get our Fibonacci retracement, swing to this point, and then we see that that was at 23.8. This one here. So this was at 23.8% right here. And that is an extension level. So we expect the market to drop and create a new low, of course. But we do not know where the new low will be formed. So what we do is that we bring in what we call the Fibonacci extension tool. Okay. One, pick Fibonacci extension, pick from the swing high to the swing low, then we connect it to previous swing high. That's a Fibonacci level. And now we want to discover where, if the market went low to the hit a Fibonacci level. So when we move down, so we expected the market move at least up to the 61.8 level. The market reached a 61.8 level, as it did. So after the market hitting this level, we expected to hit at least a 61.8. And then after a couple of days, it went up and up. then finally came and hit that level. After hitting that level, of course, the market went down further up to the 100 Fibonacci extension and maybe further and further down. Okay, see, as easy as that. So thank you for watching this video. This will mark the end of this video about Fibonacci extensions and then the Fibonacci retracements. But just to give a simple recap, we said if the market is moving upwards, and then we get a retracement, for example, right here, we expect the market to form a new swing high. Okay, up there. But the first thing we do is that we have to make sure that the retracement, the Fibonacci retracement, so we shall connect point A to point B, then discover if this point C is a Fibonacci retracement level. So if it is a Fibonacci retracement level, of course we shall take a buy, and then the market will continue to push high. Then we collect some profit. And then we have agreed and said that for us to know where the market will go, where to put our take profit, how far the market will go high, is that we shall pick from point A to point B and then point C using the Fibonacci extension, and the Fibonacci extension will be able to predict for us where the market will swing higher. Okay. So thank you so much for watching this video. Stay tuned to this channel, subscribe, and click the notification so that by any time a video comes in, you'll be able to watch it as number one. Okay. So we shall look at more technical analysis. We shall be looking at Fibonacci and Fibonacci extension tools more and more and more. So, but right for now, it's the end of this video. I'll see you in the next video. Okay, so in the next video, we are going to be looking at moving averages. So do not forget to subscribe to this channel. Thank you for watching. Bye-bye.